Like and subscribe to my channel and click the bell icon to get new video updates.
Analysis: Manchester United fans can learn to love this billionaire. There is an almost moral aversion to the use of financial leverage in the UK. Furthermore, Man United fans are already pissed that the current owners, the Glazer family, have been piling up debts with the club and squeezing out dividends. But the inconvenient truth is that borrowed money was key to the success of Ratcliffe's company, Ineos Group Holdings SA, and the firm is a textbook example of how debt can be the best way to fund a business, as long as the operations have certain characteristics. Over the next decade, more than 20 acquisitions followed, leveraged where necessary, with one towering above the rest: the $9 billion purchase of BP plc's petrochemicals business Ineos in 2005. The target was about 3 times the size of its buyer in terms of annual sales. Ineos leveraged to close the deal. Net debt climbed to €7.9 billion from €600 million in 1 year. The global financial crisis then brought Ineos to the brink of collapse. Net debt ended 2009 at a painful 7 times earnings, as measured by earnings before interest, taxes, depreciation and amortization. Ineos muddled through. The yarn in particular is another indictment of the UK stock market. It is hard to imagine that, as a public company, Inspec could have become Ineos. One reason for the original Antwerp sale was the need to address shareholder concerns about the cyclical nature of commodity chemicals. While Inspec's shares rallied following the sale to Ratcliffe, he was on the better side of the deal. The stock market's demand for dividends, its aversion to leverage and likely stock price weakness at the bottom of the chemical cycle would have ruled out Ratcliffe's roll-up strategy. In contrast, leverage and private ownership are an ideal match for commodities chemicals. In addition, Ineos has been opportunistic in refinancing its loans on extremely attractive terms when credit markets reopened after the crisis. The financial dynamics of staple chemicals and a world-class football club couldn't be more different. In the first case, you are buying a cash-generating asset that no one really wants at a price that is usually a very low multiple of profit, with opportunities to reduce expenses. With a trophy asset like a sports club, the opposite is true. Cash is sucked up through player wages and transfers.